So basically, a renovation loan is a loan product. It's one loan that does two things. It's going to allow you to purchase or refinance and then finance into the mortgage the repairs, changes, and upgrades that either you as the consumer want or that the house may need or that the seller is unwilling to do if it's a purchase.
Well, welcome to another episode of The Den, brought to you by the Knox Fox Real Estate Group. This podcast is going to be geared towards all things housing and growing the community in the greater Knoxville area. I'm Eric Wagner, broker owner of the Knox Fox Real Estate Group, and today I have a special guest. Matter of fact, if you've been frustrated with the housing market the last couple of years, with what's available to buy, when you go look at houses and you think, man, this house just doesn't have what I want or need, or it needs too much work, this is the episode you want to watch and listen to, because today I have a special guest, Trey Perry with Movement Mortgage. He is a renovation loan specialist. He's been in the mortgage industry for 21 years. He's been at Movement Mortgage for 10 years. He is their national renovation sales leader. He's the number one renovation loan officer at Movement for the last 9 years and is in the top 10 renovation loan officers of all officers in the country. Trey, man, I am super grateful to have you here. I'm super appreciative.
Absolutely. It's great to be back in Knoxville, Eric.
So I also got to give special thanks to Vicky, who is our local Movement Mortgage loan officer. Who's introduced us. Wasn't that long ago, you were actually at our office talking with our agents, basically explaining to us what renovation loans were and how they work, which was very eye-opening for our team. And at that time, I was like, man, this would be awesome. We should have recorded that. We should have recorded that, but here we are. And so now we get to talk about, renovation loans, which, as we were just talking about, you said is like one of the best kept secrets that you want everybody to tell.
Yeah, absolutely. We are definitely, you got the negative connotations that, we're the redheaded stepchild, but typically what I like to say is we are the best kept secret that we don't want to be the best kept secret. We want everybody to know about how powerful a renovation loan can be.
So let's just get started. For those who don't know, what is a renovation loan?
So basically, a renovation loan is a loan product that it's one loan that does two things. So it's going to allow you to purchase or refinance and then finance into the mortgage the repairs, changes, and upgrades that either you as the consumer want or that the house may need or that the seller is unwilling to do if it's a purchase.
Okay, so let's just say I'm a home buyer and I'm looking at a house, and so when we work with home buyers, there's a small segment of home buyers who are like, hey, I'm looking for a fixer-upper. I'm okay with, paint, carpet. I'm okay with fixing up a house. The majority of consumers, home buyers, they're looking for a house that is move-in ready. Right, so that typically falls into one, new construction, which is typically more expensive, number one. Two, you lose a lot of, I would say, options, right? Like, for instance, today's new construction homes on smaller lots, they clear cut the neighborhoods. So you're not going to get that, if you're somebody who wants a home closer into town that has character and a big yard and trees, you're not going to get that in new construction these days.
That's right.
Okay. So then the second one is what I like to call a cream puff, right? And so that's a house, in my book, that's a house that somebody has taken great care of. They've updated. It's just, typically the perfect, beautiful home. The downside to those is when they hit the market, they typically sell super fast, very competitive, typically over ask. Like that's not a home that a lot of buyers are. It may look obtainable, but it's much harder to get that cream puff, right?
Absolutely.
Then there's the flip. And this is the one that, like, I've worked with flippers and investors, people who buy homes, they fix them up and sell them. We've all watched this on TV. And what I've seen happen is buyers walk in and they go, "Oh man, this house looks great," and then we do the inspection. And typically, historically, what I found is flippers like to paint, carpet, some appliances. They typically don't do the roof. They typically don't replace the water heater. They typically don't replace the HVAC unit. They don't fill out a property disclosure, okay, because they say they can get out of that because of the haven't lived in it for the last 3 years deal. When reality is, though, they probably know everything about that house. So I've seen a lot of people get into flips and it not be all it's cracked up to be. You're saying there's a product out there where, as a real estate agent, I can take a buyer, we can look at a house that needs work, and they can basically work a deal and finance that in and make the house what they want themselves.
Absolutely. So, if you remember, a lot of times taglines, if you remember having a tagline was so important. My tagline for years has been helping you turn a house, which has no connotation, to your home, helping you turn a house into a home. So when you think about it, buying a house is one thing. Being in your home is completely another. So that's the power of the renovation loan. All the things that you just mentioned, a new HVAC, water heater, roof, doing those things, all those things are possible with renovations. So with a renovation loan, there's only the outside of picking a house up and moving it across town, which we could do until 2020. Outside of doing that, there's really no renovations that we can't do depending on what the customer qualifies for.
So, okay. So just thinking about this whole thing. So you're saying with this product, I can buy a house. I can, how does, like, kind of take me through how this works?
Sure. Well, I would always recommend that you start with one of our movement mortgage loan officers. Get yourselves pre-approved. Now, there's a difference between being pre-qualified and being pre-approved. So, but get that number. Get the number that your top number that you can work out for, and then basically all the same things that happen with a traditional loan are still going to happen with a renovation loan.
Okay.
So, we're going to ask for things like pay stubs and bank statements and W-2s, and, we're going to ask for all that normal paperwork. Where we come in differently is we're going to ask you to line up a general contractor to provide us with an estimate for the work to be done. We're going to then give that estimate to the appraiser, and the appraiser is going to come back to us with a future value. This is how much the house is worth once the renovations are complete. So now, once we've gone to closing, the money that's been set aside for renovations is going to be put into an escrow account that Movement Mortgage is going to manage. And then the contractor will complete the work and then take the money out in a series of draws.
Okay.
So he'll come up, he'll say, hey, I'm done with A and B. I need to be paid for A and B. We inspect it. The customer signs off on it that, hey, A and B are done and done correctly and to my satisfaction, and then we pay the contractor. So
sounds a lot like a construction loan.
it is. It is kind of construction like. We're not doing it from the ground up. That's the biggest thing. Now, again, with the renovation products, it does give your customers, it does give your clients the ability to do things like overbid on the house. I would tell you, have your customers go in to Vicky, get their number, and let's just say that number is $400,000, just to pull a number out of the air.
Okay.
I would tell you to have your buyer's agents not show them a single house at $400,000. Show them a house at $300,000. Show them a house at $315,000, because that's going to give them the ability to overbid, which in a low inventory market that we are in currently, that's going to give them the ability to overbid, and it's still going to leave them $50,000 to $60,000 worth of work that they can do to the house. So, and it makes, as you said, it takes it from being a house that they're buying, it turns it into their home. So, because again, if it needs another bathroom, if it needs a new master bedroom suite, appliances, paint, flooring, HVAC, roof, again, the list goes on and on and on.
So in essence, this could really unlock a lot of inventory because there's homes that, like I said, if it's not one of those three homes, then it's a home that probably needs a little bit of work. And again, most buyers are turned off by that because they don't have, hey, I'm gonna spend this money on the house and then I got to do all this work. Well, number one, it sounds like in this they can't do the work.
That's correct.
It's a contractor.
That's correct.
Okay, and I assume that there is a period of time it has to be done in.
Yeah, it depends on the product. Depends on the product.
So with this, basically, they buy that house, they basically hit go on everything, and when they actually move into it, it could be a completed, ready move in, just the way they want a house.
Well, so none of the work with renovations, none of the work happens before closing. That's one of the benefits of a renovation loan, is that we're going to get the estimate. We are going to give that to the appraiser. Appraiser's going to give us a value, and we're going to base our loan, on those figures. But then none of the work has to be done before closing. So
Right.
when you negotiate a deal and you negotiate repairs that the seller is going to take care of, then a lot of times, there's a renegotiation of the price. And so instead of doing that, if you do a renovation loan, then, both buyer and seller can be a little bit more aggressive, in terms of how they're handling the purchase price, what the purchase price is going to be. Because if they're doing a renovation loan, none of that work has to be done. But I don't typically care about the condition of the house. Like, I don't want to see a home inspection. I don't care. So with that in mind, it does allow the buyers and the sellers to be slightly more aggressive in how they're negotiating, how the deal is negotiated. Because even if somebody says a house like, hey, this house, I don't need to do anything to this house to pass a traditional loan inspection or a traditional loan appraisal, the average person in the United States is going to spend upwards of $35,000 on their house the first year they're in it.
That's crazy.
Yeah. So why spend $35,000 of your own money, or you go get a Lowe's credit card at 24%? Nothing wrong with Lowe's. I love Lowe's.
Yeah.
So, but you get a Lowe's credit card at 24%, where you can get a renovation loan, finance those changes in, and you're still paying, a decent rate. So
well, and to that point, being able to or being in a position where you then are hiring a qualified contractor to do these repairs and to get this work done for you, it's probably a good thing, because there are a lot of do-it-yourselfers out there that find out they're maybe not that great at do-it-yourself projects. So doing it this way, you get that benefit it sounds like to me, get the benefit of that flip house, but you actually control what's being renovated, right? So like if the roof is 25 years old, even though it looks good and isn't leaking, you're potentially replacing the roof so that you have a good roof for the next 25, 30 years.
absolutely.
Things. Okay, so let's talk a little bit about. I'm curious about this, about down payment. Okay, because if I'm buying the house and I'm basically borrowing more than I'm buying it for, like, how does that work?
So what I typically tell both, the loan officers that I work with, or customers that I work with, is just because it comes to renovation, nothing really, the numbers don't change. It doesn't magically become something else. So again, same scenario. You've gotten your customers over to Vicky. Vicky has pre-approved them, pre-qualified them for $400,000. Again, using that same number. So if they go out and find a $300,000 house, make the offer on it, win it, and then they want to do $50,000 worth of work, then everything that I'm going to do is going to be based on that new number, $350,000.
Okay.
So that combined number. So if she's qualified them for an FHA loan, That's 3.5% down. Well, my 3.5% down is not on the 300,000; it's on the 350.
Gotcha.
So it's on the combined number. So is their down payment going to go up? It is because again, it's going to be based on that combined number. But the misconception. A lot of times, there's a misconception with renovation loans, like, oh my gracious, how am I going to afford to finance these $40,000 or $50,000 worth of renovations into the loan? Well, what you have to remember is you have to help customers get past what I call car buying mentality. So if you go out and buy a $50,000 car, okay, well, that's going to be financed over 72 months, maybe 84 months if you're lucky. And so that payment's going to be $800-900. And so they have the same kind of mentality when they go out to buy a house, and you're talking to them about renovation loans. Like, man, if I finance $50,000, that's $800-900 being added to my payment. No, because mine is going to be amortized or paid out over 30 years. The chances of that customer actually paying out truly the way the renovations are structured is almost zero. So if not zero,
because they're probably gonna either refinance or B sell, or I mean, there's
life happens. Yeah, life happens. The statistics don't lie. I mean, the average person still does something with their house every 5 to 7 years.
Yeah.
And that's the other good thing about renovations is, so you can do a purchase now, use a renovation loan to make the house the way you want it, and then walk right back into Vicky or one of our other loan officers and refinance in the wintertime once the renovations are complete.
So that it almost sounds too good to be true. I'm gonna ask you this question: why don't more loan officers do these?
Because there's going to be the horror stories. Everybody's going to hear the horror stories. And those are the things that you hear about in social media, or, hey, these loans never close. It's not true. These loans take forever to close. They're going to take 60 to 90 days. Movement mortgages turn time on renovation loans is 33 days.
Which is what a normal mortgage, just a conventional loan, sometimes just takes 30 days.
Right. So we're 3 days long. We're 3 days, approximately 3 days longer. The key to a renovation loan, a lot of times, again, because just as I mentioned, what we're asking you for, what we're asking you as the customer for, doesn't change. I mean, again, it's still pay stubs and bank statements and W-2s, and
right.
It's still those same items. Again, the key to a renovation loan, hands down, is the contractor. The sooner you can line up that contractor, the better off you're going to be. So now every state is different in regards to their contractor requirements. Tennessee has 3 different classifications of contractors, and so you have to pick the appropriate contractor for the amount of work that you're doing. But like you go right across the line into North Carolina, and it changes. North Carolina, it's up to $30,000. It doesn't have to be a GC. It can be a handyman. Whereas if it's over $30,000, it has to be a licensed GC. So every state that you guys work in, you would need to make sure that the customer understands what are the requirements for the general contractor. But truly, that is the biggest additional step. But most people don't do them because, again, they've heard about the horror stories, the ones that have never closed, or my GC wound up not being a good person. And we approve our GCs. So they actually go through a process. They have to turn in documentation that says, hey, why are we going to pay you money? Why are we going to give you additional money for our customer to make these repairs and stuff? So it's called validation. We validate or approve our contractors.
Okay. So you do something. Well, I guess Movement does something a little bit different than what I've heard in the past, because I have heard of renovation loans, but again, nobody ever, kind of the redheaded stepchild kind of deal. Like, nobody ever wanted to do one because they're struggling. I think it's because they didn't do them, right? But what I'm hearing is that's all you do.
That's correct.
And you work hand in hand with with our local movement loan officer.
Absolutely, absolutely. So one of the things that makes Movement unique, or any company that's serious about renovations, Movement, we want to be involved with this product. We want to offer this product to our customers. In fact, our co-founder Toby Harris, Toby has been in renovation loans.
Terry Joe and I preach local loan officer, local loan officer. You want somebody local, somebody who knows our contracts, knows our title companies, that has a good communication relationship with us. You're not actually local here in Knoxville.
That's correct. Yeah.
You're out of is it
Charlotte?
Charlotte. Okay. So, but you work hand in hand with the local loan officer here.
Absolutely.
Now, one thing that was mentioned before, and I thought this was kind of interesting, is so like I would basically, let's just say I had a buyer and they're potentially interested in a renovation loan. They just ultimately they just want a house, right? I mean that's what a buyer wants. They want a house, but they want that option. So I would take them to Vicky. Vicky would get them pre-approved, and then potentially loop you in.
That's correct.
Okay.
Yeah, so I'm really just an arm or an extension of Vicky and the rest of her team. So, I would tell you that if somebody asked me, I would say, "Oh, well, I work for Vicky."
Okay.
So because that's what we want to do. We give our loan officers the ability to do a renovation loan, and then I'm just there in the background, kind of continuing to be coach. Some LOs, some loan officers don't, want that. They want me to just take it, and we have people that can do that as well. So, but 9 times out of 10, we're going to be more coach than we are anything else.
Gotcha.
So,
okay.
But one of the other things that does make us different, looping back to the way Movement handles things, is we have an entire department that does nothing but renovation loans.
It's very specialized.
Absolutely. So we're called Renovation Nation.
Renovation Nation.
And that's all the processors, the underwriters, the closers, everybody involved with the process, the people that the customers are never going to speak to, never going to meet, but all of those people are doing nothing but renovation loans. So that's one of the reasons why, we can boast, hey, we can close a renovation loan in 33 days.
Well, that would be the reason why then a lot of other mortgage loan originators are not, like, this isn't even on their radar as a product, because nobody wants to be the first person that a loan officer has to try to figure this out with.
Right.
And no loan officer wants to potentially mess up their relationships with their agents and their buyers by messing up, something like that. Because I could see how this could be a nightmare.
Oh, it absolutely can. But again, I'll drive home this point. Eric. We've talked several times. Again, the key is that contractor. So again, the sooner you can get a contractor, the sooner we'll get an estimate, the sooner we'll order the appraisal, the sooner we'll go to closing. Again, all the normal stuff is still happening. We're still working with a title company to do the title work for the house. We're working with the appraiser, but of course we can't order the appraisal until we have that estimate. All of the stuff, the underwriting, the processing, again, none of that stuff is going to look or feel really different than if one of your clients sat down and said, "Hey, I found a move-in ready house. I'd like Vicky to, just do a good old conventional C30 on it, and we can go from there."
So what are let's say what options are there? Okay, so because we have buyers that are, maybe they're 100% financing, or we have buyers that are veterans, or so how does this work? Because they may be thinking, well, I want to use my VA loan. The renovation loan sounds nice, but how does that work?
So we've got all the major renovation products that are available in the market. So most people have heard of renovation loans because they go, yeah, that's that 203 203 something loan. So yes, so we have the 203K, which is the FHA product.
Okay.
We have both the limited and the standard versions of those. Whether you're in one or the other depends on the amount of renovations and whether or not there's structural work to do with them. We have the complete suite of homestyle products. So homestyle has a 3% down first-time home buyer, a 5% traditional, a 10% down second home option. So if somebody wants to buy a vacation home here in the Great Smoky Mountains, we have an option for them. A place at the beach. And then we also have the investment option for those people who are wanting to add real estate investment as a part of their retirement portfolio or their additional income, their supplemental income portfolio. We have an investment product as well. We have a VA renovation option. And then we are one of the few lenders in the country that have USDA reno. So for those folks that qualify for USDA and that the property qualifies for USDA, we have a renovation loan option for them as well.
So you have basically between VA and USDA, you have 200% financing options.
That's correct.
That's awesome. That's awesome.
Yeah, and the VA product does allow, it's everything that you already know about a VA loan. It's all that, but we allow up to $50,000 worth of renovations to be financed in. Still 100% financing. The renovations just have to be all cosmetic. So we don't have any structural work that we can do with those. USDA actually allows you to finance in up to $75,000, and again, there is an option for structural work.
So when you say structural work, can you elaborate a little bit more on that so that everybody understands what you're...
Sure. Structural work is typically going to be, hey, we're going to expand this space. We're going to build an addition. We've got to do foundation work. There's, anything that involves, changing the configuration of the house in terms of, hey, we're going to add a new master bedroom suite. We're going to change this half bath into a full bath. Anything along those lines is going to be considered structural work. Okay. But, hey, we want to get a new HVAC. We want to put a new roof on. We want to get new appliances, those kind of things. None of that is structural work.
So taking down wallpaper, putting in paint, popcorn ceilings, carpet to hardwood, like the whatever, basically kind of whatever a person wants to do to the house, as long as it fits within the budget.
That's correct. So, the FHA product, the 203K product, will actually allow you to knock a house down all the way to the foundation and rebuild it. If it will support that, you can take it all the way down to the foundation. So
that's pretty wild. Excuse me, that's pretty wild.
So there's all kinds of things that we can do. I get asked a lot of times of like, what are some of the craziest renovations that I've ever done? When we were able to move houses, I actually picked 6 houses up and moved them across town. That's a great day watching them do that. I built a helicopter pad for a customer here in the Great Smokies. He was a doctor. He had about a mile-long access road to his house that wasn't paved. And so when it would snow during the winter, he could literally get trapped in his house. But he had access to a helicopter, and he had his pilot's license. And so because the helicopter pad was permanently affixed to the property, I could build him a helicopter pad.
That's crazy.
Yeah. So a lot of the times the HGTV has both helped us and hurt us because people want to do that stuff themselves. They want to make that, and unfortunately, you really can't do that. But that's renovation lending going on in the background. They always come up with the HGV always has, oh no, we found something else. Well, we've built in contingencies into renovation lending to take care of those surprises that come along. So that's renovation financing going on in the background is what the mortgage that those folks are doing.
So, and at the end of the day, I mean, it makes sense that you would need a licensed contractor. I mean, the bank is basically letting you borrow money to do these repairs, to fix this product up. So that makes total sense. I would have never have thought a helicopter pad though. Like that. That's pretty wild. So do you? Okay, and I'm gonna backtrack just a second. I think it's amazing that you guys do second homes and investments as well. Um, that would have given the current market, I know that it's been a little bit harder on second homes and investments just because of the way the industry's been in the last couple of years. But you're actually going as far as doing renovation loans for them. That's pretty amazing. And I'm just in my mind, I keep going back to that person who wants a home that has. I mean, we hear it all the time. I want a home with character, or I want a home, especially when it comes to like bigger yards, right? You don't find homes. Brand new homes are not on bigger yards.
That's
Matter of
correct.
fact, they just get smaller and smaller, right? So whenever I hear that thing, I automatically in my mind, I'm thinking, okay, it's an older house. And then you start to look at older homes, and you realize that the client wants some of the benefits of an older home, but they don't necessarily want to live in an older home.
That's correct.
And so I could see this being way more utilized, especially so. I mean, even today, we have a little over 4,000 homes in the market for everything that's in our MLS. It's spanning 12, 13 counties, right? I think about, so there's homes that didn't sell, and the reason why they didn't sell is probably because they needed work, right? So being able to go back to those home sellers and saying, hey, I've got a buyer who might be interested, we could make a deal work. I think about the homes that are sitting on the market, right? Why are they sitting? Because I mean, the average days on market is under 30. So if a home's on the market for 4 months, well, there's opportunity
Absolutely.
in these homes. And so being able to walk in and say, okay, I understand you don't like the popcorn ceiling, you don't like the 1970s wallpaper, but what if it didn't have all that? Does the space work? What if we did make that bathroom bigger? Especially around here, a lot of older homes, especially you get into certain floor plans. I mean, we see a lot of split foyers, right? Well, a split foyer, and even some of the ranch homes, the master may only have a half bath. Is there a potential to renovate that house to make it more functional for today's living? These are great options. I'm just amazed we're not doing more of them.
I mean, so track building houses became very popular in the 90s. That was a 90s thing, is when you saw a lot of the track builders. Well, now think about that. Those houses are almost 40 years old.
Yeah.
So, I mean, who's not going to want to have, renovations on a potential almost 40-year-old house? So, and you still got the houses, as you were just talking about, with character. I mean, some of those, I've got a project going on right now that was on an 1886 house. So, I mean, built in the 1800s. So it's more than 100 years old. And we're doing things to not do anything really to the outside to harm the character, but we are going to have a semi-modern house on the inside. You're still going to be able to have all the functionality that's needed in today's, that a homeowner today is want. Plus, it's going to have all the charm that from an 1800s
home. Yeah.
So
no, I think that's an amazing option.
Right. Well, I mean, and in terms of second homes, I mean, again, second homes and investment properties, I mean, we do have the ability to do that. So a lot of people are wanting that, you know, that home at the, at the beach on the North Carolina, South Carolina coast that you can get to in, 5 hours, 6 hours, that you can get there and, they buy an investment property down at the beach and they turn it into an Airbnb. They do something along those lines. I mean, we have options to help you do that. A lot of times with investors, the biggest thing with investors is they come up and they say, hey, I want to start investing in real estate. I have the money for down payments on these houses, but I don't have the additional $35,000, $40,000 to fix the house up so I can put a renter in it. And so, well, again, that's where a renovation loan can come into play. And we're not having them spend every single bit of money that they've saved up on the first house and with no way to recoup it for 2 or 3 years, of renting it out. So the renovation loan, again, if they find something, again, investors always like a good deal. That $100,000 house that needs $40,000, $50,000 worth of work, okay, well, again, I've just changed your down payment a little bit because now I'm going to do everything based on the 150 as opposed to the 100,000. But you'll be able to put a long-term rental in, and you'll be able to make that money back a lot more quickly.
Yeah.
So I mean, again, we have everything that a consumer would need in terms of options when it comes to the renovation loan.
So what are some things that you can't do with a renovation loan?
I can't move a house anymore.
Okay.
Anything that's not permanently affixed to the property, I really can't do. So
it's like sheds, barns.
Right. And I can't do something that's real popular now a lot of times is what they call barn dominiums. Mm-hmm. So where somebody's taking an old barn and wanting to turn it into a residence. Can't do anything along those lines because that barn has never had a certificate of occupancy.
It was never a house.
Right. It was never a house. It was a barn.
So it's got to start as a house to get a renovation loan.
Yes. Okay. Yes. So but outside of, I mean, again, I tell people all the time, to think about it is, I can build you a deck. I can't build you a Chip and Joanna Gaines deck, that has stadium seating for 25 and, the never rust outdoor appliances. I can't build you something that's over the top.
Right.
I can build you a deck. So there's really not a lot of renovations that I can't do.
So we kind of have talked. A lot. There's a lot to this. So just to kind of to recap, if I'm a buyer and I'm again most likely frustrated, I'm looking at what's online, probably exhausted at the prices of what people are asking for homes these days. I mean, you hear it often as like, I can't believe they're asking this much for that, right? Then this may be a perfect opportunity for that person to find a home that fits their budget, because ultimately they get pre-approved for what their budget is. So find a home that fits their budget, can get the updates that's basically what we're talking about. We're talking about updates. They don't have to worry about them doing the work, right? I would have to say that's probably a big concern for a lot of people when it comes to fixer-uppers is I'm going to move into this house and then this is going to be an ongoing money pit project that never gets done. But that's not the case with this because there's a time limit.
There is.
And you have to use a contractor. There's a whole process that you specialize in to make it as smooth as possible. I feel like we just need to run out and find somebody and go do this today.
Right. Well, I'll be waiting for your phone call. So no, I mean, a lot of times what I tell, buyers agents, okay, you've all had them. I call them the customers known as the butts. So you take a very nice couple into a house. You show them around. You're standing on the front stoop, and you go, "Well, what did you think?" And they go, "Well, we liked everything about the house, but." So your answer as a buyer's agent, 9 times out of 10, because again, we're the best kept secret in the mortgage industry. Your answer 9 times out of 10 is, all right, well, let's get back in the car and go see the next one.
Mm-hmm.
You run the same process. You show them the house. They're oohing and ahhing. You get them out on the front stoop, and you go, "What'd you think?" And they go, "Well, we liked everything about the house, but." So again, now you're showing them a third house. You might even showing them a fourth house. By the time you're at the fourth house, they go, "You know what? We really liked the first house. Can we go back to that one?" Well, by that time, the first house has had 7 other showings today. They've got 4 full price offers, and one person's willing to pay cash. So they're not going to win that house. We want to equip the buyer's agents to be able to say, okay, well, we're going to call Vicki. We're going to call Vicki Williams over at Movement Mortgage. There's this product out there called a renovation loan. We can fix all of those butts, because 9 times out of 10 it's going to be, I really didn't like the paint, and the flooring is bad, and there's only one sink in the master bedroom. We really want double, a double vanity. So again, we're equipping you as real estate agents to be able to say, hey, these are things that we can fix. We actually have a mortgage product that allows you to fix these things. So it stops that customer right there, and says, do we need to look at any other houses, because of this product? The second thing is, as a listing agent, you've also, I'd be willing to bet, a steak dinner, at Connors, here in town.
I'll take you up on that.
That you've walked into a house before, and gone, you have that intake of breath, because they're like, that's a fire engine red kitchen.
Yeah.
Oh my gosh, I just felt the temperature go up 2 or 3 degrees stepping into the kitchen. So it's great for the people that live there, because it matches their personality. It's their charm.
But it's not great for selling.
That's correct. So we have tons of renovation materials where we can promote the house as a renovation possibility. And when customers are focused on what they can do to the house, guess what they stop focusing on? How much underneath the asking price they're going to want to offer. Because in the back of their mind, they're going to go, oh, there's at least $20,000 worth of work to be done to this house. Now, where they're planning on getting that $20,000, nobody really knows. But if they say, oh, there's $20,000 worth of work here, they're going to come in, their offer is going to be $20,000 underneath the asking price. That's hurting values. It's damaging your commission, as a listing agent. So if you've got, like, hey, we know this house may need a little character upgrade, if you get them talking about what they can do to the house, they stop talking about what they need to do to the purchase price.
Well, one thing and we have this conversation often with home sellers, is yes, I understand that the home, that this repair or this upgrade only costs, say, $5,000, but no buyer's going to walk into this house and give it fair market value for that upgrade. It's always at least double, right? In their mind, because most buyers don't really know. So it's always the worst case scenario. This is going to cost, $5,000, but now it's 10.
Right.
This next thing is, they just keep adding it up, and either one of two things happen. One, they want to come in at an offer that is absolutely, offensive to the seller, which, as a buyer's agent, I'll present whatever, right? Like, I will try to get that deal done. My team will try to get that deal done. But the way we negotiate in our society, unless it's a corporation or an investor or somebody who's not attached to the house, when it's a homeowner and you come in and you just slap them with, hey, we're offering you like $30,000 because it needs all this work, a lot of times they get offended. And until they as a seller, they have to realize like, hey, my house is not going to sell unless either these repairs are done or I market it at a price that a buyer sees themselves doing them. This product here is like that middle ground.
It is.
Right? Where the seller can still get kind of a fair price for their house. The buyer can make all those repairs at a fair, like, and finance it. So it's not even out of pocket money necessarily.
That's correct.
It's financed in money, which at the end of the day doesn't really affect the stretch over 30 years versus, like you said, a credit card payment or even a short-term loan. Definitely has a much different impact on their payment, on an appreciating asset.
On our appreciation, yeah, absolutely.
So many options here. Is there something we haven't talked about? Is there something that's a consumer needs? Like, if you were sitting in front of somebody and you're like, "Hey, you really need to know about this." Is there something else to this?
I mean, again, the best thing that you can do, it really doesn't matter if you're if you're a buyer, the best thing you can do is get in front of Vicky and the rest of the team at Movement Mortgage and let them get you pre-approved, pre-qualified. Again, it really does all start there. And whether you're thinking that you might go renovations or you're not going to go renovations, you should always start with trying to get qualified with a lender.
Well, so to that point, so if I go down that path, I'm not locked in on any one direction.
Absolutely not. Yeah, you are absolutely. I mean, if you've spoken to me, Vicky's talked to you. You've had a couple cases. You say, "Well, tell me about this renovation loan." She gets you over to me. We have a conversation, and then the next week you find something that's move-in ready. We go right back to Vicky. So I mean, again, I don't have to be involved.
Yeah.
So, but I'm certainly a great option for a lot of people. In terms of a seller, I would recommend a lot of times with sellers is, you can even do a renovation loan and get the house back to, what we call beauty base 0. And it may be more appealing for a,
make it move in ready for a buyer.
Yeah. So you can do these as both a purchase or a refinance.
See, I didn't realize you could do it as a refi. That's pretty big too. So if I've lived in my house for, say, I'm one of those that have been in it for 10, 15 years, and I can just go ahead and build. Most people, I think of like home equity lines.
And the reason why you would want to consider a renovation loan over a home equity line is whenever you're doing a cash out refinance or you're doing a home equity line or anything along those lines, it's based on the as is value, what the house is worth as it sits right now. So whereas, again, with the renovation loan, a renovation refinance is going to be based on the after improved value, which is going to potentially give you more equity.
So I think sometimes people have a hard time wrapping their head around the fact when it comes to real estate, sometimes less is more when it comes to how much money you put out of pocket, because it is an appreciating asset. Like, people, not everybody has, I think, the money mindset, right? They think like, I don't want to pay PMI or I don't want to have this. But the reality is if you have more money in your pocket, you can go invest that money into other places and potentially make more.
Absolutely.
And so, like, it just gives you way more options and freedom. So that's a pretty cool setup. So if I'm a home seller and I want to list my house, but maybe I don't have time to go through the renovation, or I just don't want to, or whatever.
Sure.
As an agent, I could potentially bring in a contractor. I could go ahead and get quotes. I could go ahead and have something set up like, hey, this is what this house could be, and this is what it would take to do it, and make that an option for buyers that are walking in the door.
Absolutely. Third renovation loan I ever did was an agent came to me with almost that exact same scenario. Hey, I've had this house on the market for 4 months. It's had 4 showings. Nobody likes it. The house itself had great bones, but it was super dated. It was a house built in the 70s, and they hadn't really updated it since the 70s. Shag carpet, popcorn ceilings, what I call a runner bar closet, which is, if you and I are approximately the same age, Eric, so, we remember these from when we were kids. It mirrored glass on the front, and it slid open, and then it had a shelf, a bar to hang clothes on, and then nothing but space.
Yeah.
So I call that a runner bar closet. So it had runner bar closets, shag carpet, popcorn ceilings. So we had a contractor go in and just do a punch list, new flooring, $8,000, new paint, $5,000, and he did it, and he put it on his piece of letterhead. We did a financing sheet that basically showed, okay, here's a full price offer with just traditional financing, and here's renovation financing, with these $50,000 worth of renovations being done, so they could see the difference in the payment. We married those two things back to back, and I bought $1.15 stand up from Office Depot, Staples, and we took it and we stuck it right in the middle of the kitchen table. And then we made a couple of changes to the wording in MLS, which I don't necessarily think that you can do anymore, but we talked about a handyman special or something along those lines. And that house had 10 showings in 1 week and got 4 full price offers.
Wow.
Just
made all the difference in the world.
Absolutely. So, because again, if the customer, again, it goes back to those customers being the buts. I like everything about this house, but, we always tell people it's everything after the word but that you always have to worry about. So, I got the loan. They got a full price. The sellers got a full price offer on their house, so that made them happy, their agent happy, and the contractor got, because I even told him, I said, you don't have to use the contractor. They looked at me like I had grown 2 extra heads, because they were like, why would we use anybody who hasn't been in the house?
Right.
So the contractor got the deal, and I mean, again, we're probably talking probably a half an hour's worth of work for him to come out and do the punch list, about a half an hour for me to do the financing sheets and to run to Staples to get the stand up, 15 minutes for the agent to change the wording in MLS and put the stand up in the house. So for approximately 2 hours worth of work, we made all the difference in the world when it came to the way this played out.
Well, and kudos to that agent for thinking outside the box, like trying to figure out, because that's what every seller wants. And I sit here and I think about homes that have that are in need of work, that people. There's a whole segment of our market. It's investors who are looking for off-market opportunities, right? So they're advertising to people saying, "Hey, I'll buy your house for cash." There's whole corporations that do this now. I'll buy your home for cash. We'll do the fix up and we'll resell it, basically. Well, essentially, that homeowner is giving away equity, because that investor's not only, they're actually looking at that house with bigger dollar signs than that buyer is, right? The buyer who walks in and says, "Hey, this house, even though it only needs $5,000, I think it needs $10,000 work." Well, that investor is looking at it going, "Well, it needs $5,000, but I want to make 30.
Right.
So I can offer you this much cash, no problem." Well, they're essentially stealing your equity, right? So in this scenario, you know, there's no extra work from the homeowner in reality, but they have an option of getting all of their fair market value for that house.
Absolutely. And again, we had touched on this. Inventory is still low,
Very.
so we're probably not going to see any kind of rate relief until later in the year, if we see it at all. The Fed's still saying 3 rate drops this year, but we'll see how that plays out as we move further and further into the year. So I think what we're going to see is we're going to see a lot of people what happened to us at the beginning of midsummer 2020 when people said, "Hey, you know what? COVID. We're not gonna move. We're gonna stay in place." So again, that's where the renovations, or renovation refinance comes into play. That it's going to allow them to make those upgrades that they've been sitting on for 15 years. Redo the bathrooms, redo the kitchen, and then if they turn around and they do decide to sell it next year, they have an appraisal that says, "Hey, this is how much the house is worth."
Yeah.
They've probably brought it back up to
Today's standards.
And so that house is going to be much more marketable and much more attractive to those potential buyers when it does come time to sell.
So, and that is always kind of a hard conversation to have with a homeowner who's like, well, the house around the corner sold for, again, for like 400,000, and my house is pretty much the same house. But then you start looking around, you're like, well, that house had an updated kitchen. That house had, a bunch of updates, and your house has the original HVAC unit, the original, yeah, those things work. But when a buyer comes in and looks at it, again, they look at it with these eyes of, wow, that AC unit's 15 years old. Well, there's 10 to 15,000 bucks, right? Man, this kitchen has never been updated. This is the original appliance.
Right.
It's just it's not. It doesn't have the same. I'm gonna call it street value. It doesn't have the same street value.
That's correct.
Than that house around the corner. And so, when you buy a house and you own a home, to protect your protect your equity, to protect your value, you have to reinvest into the house. Every so many years, you want to put more money into it so that it stays up with the current market. Otherwise, what I've seen some people do, and it's pretty funny when it happens this way, because they all say the same thing. I've seen people go and then do work before they sell a house. They've lived in it 10, 15 years, and then we walk through and say, okay, so here are our recommendations, because if you want to get this price, you need to do these things. And then they do those things. And then right before we put it on the market, they go, man, I wish I'd have done these things a long time ago. I wish I really like what we've done. I wish I could stay, but I need to move. And so the other part of that is why not do, kind of like you were saying, why not do those upgrades and enjoy the home?
Exactly. So, because again, your spouse comes up and says, and I'm going to use my own personal one. My wife keeps telling me that the next house that we buy, we're getting a pool. If we have to do a renovation loan and you want to add a pool, okay, I can do that. So, but so a lot of times what people will find is exactly that. Hey, to be able to have more square footage, hey, I just found out my spouse was pregnant with twins. How are we going to put, two new souls coming into the world in our 1,500 square foot house? But we really don't want to move because we like where we're at. Well, okay, let's do a renovation refinance and build a new master bedroom suite. We have a tremendous opportunity in this current, environment with being able to do what they call accessory dwelling units, what we used to affectionately call mother-in-law suites.
Yeah.
Like we can build accessory dwelling units. A lot of people don't know that. But the other thing that we've got in this there was a survey done a while back that 65 to 75% of the baby boomers in this country who have the majority of equity in their homes, 65 to 75% of the baby boomer population wants to age in place, what they call age in place. So they want to stay in their home that they've lived in for 20 years, 30 years. They're sitting on a ton of equity, but only about 15% of those people have done the necessary upgrades and things that they need to do to be able to age in place. They need a ramp. They need wider doorways.
Redo the bathroom.
They need walk-in, showers. They need lower cabinets. So these are all things that can be done with a renovation loan. So, as their children, we should help them try to get to do a renovation loan to make these changes. And then we even have other options at Movement Mortgage where we have, reverse mortgage options to where we could wind up paying off their house and they not have a payment at all. So, I mean, these are things that we offer that, we need the consumer to be more educated about. So
well, that's why we're doing these podcasts.
Absolutely. So you should absolutely have one of the members of the Movement Mortgage's retirement mortgage team. You ought to have them come in and do this exact same thing because, that's another product that has a wildly bad reputation. But when you start looking at the power behind that, you'll go, oh my gosh, because a lot of things have changed with that over the last 5 years.
Well, and that's what I've come to realize over the years is that there are products that once had a bad rep for whatever reason have been changed sometimes multiple times in order to become a much better product. It's very unfortunate that they end up with a stigma. I mean, let's be honest, veterans, VA loans, still to this day have a stigma of being a very tough loan to get done. Yet they're not.
No, they're not. So, I mean, and you've got what they call residual income on a VA loan that allows you allows the customer to really buy more house than they could possibly dream of. So, I mean, again, that's why I'm gonna say again, get your folks, folks get in front of a Movement Mortgage loan officer and let them go through those options. You may be very surprised, and that kind of leads into the discussion of the difference between a pre-qual and a pre-approval. A pre-qual means I've looked at it.
Yeah.
I mean, me as the loan officer, I've looked at it. A pre-approval means that you've turned in all the documentation and an underwriter has looked at it. And when that underwriter, puts her initials next to something and says, hey, these people are good to go. That's a done deal. That means go find the house that fits in this box and you're ready to go.
That's awesome. So we determined that a renovation loan is great for buyers. It's great for homeowners that want to fix up their house with a renovation refi, and it's great as an option for marketing a home for sale that maybe needs a little bit of love. So it's a great tool for real estate agents and homeowners to sell homes. Man, what a powerful tool. I'm so glad you came in today. And if anybody has any questions about renovation loans, how it may fit for them, we're going to put your contact information down here. We'll put Vicky's, who is our preferred Movement Mortgage lender. I've known Vicky forever. Matter of fact, she's one of the first mortgage loan originators that I met when I moved here in 2007. So she's actually financed two of my homes. So personally, if a real estate agent uses them,
right?
So and she's helped a lot of our clients. We'll put all that contact information, down below or wherever you're watching this or listening to. But feel free to always reach out to us at the Knox Fox Real Estate Group, and we can connect you with the right people you need to know. Trey, I really appreciate you coming out.
Eric, it's been a pleasure.
This has been a lot of fun. And I'm looking forward to, the next time you're swinging through town, you're gonna have to stop by, say hi, and
absolutely,
and let us know what's new with renovations.
Absolutely, sounds good.
Thank you, buddy.
Yes, sir.